To Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates and then do a deep dive into CDFI Loans. Very special program that we're going to be talking about here today. We'll wait just a minute here to get started. Let us go live on all the different platforms. We put the chat up on the screen, so feel free to drop a comment there in the chat. See some people were already tuning in, some comments coming in. Appreciate that. All right. Also, as we go through, you can feel free to drop any questions you have in the chat. Might be some questions today, especially because it's definitely a unique program that we're going to be talking about today. But thank you for the comments that are already coming in. We appreciate it. And it looks like we are live on all the different platforms. So I think we can go ahead and get started. We'll take the chat off the screen, but please keep dropping comments there in the chat and also drop any questions you have in the chat as well when we do our deep dive topic here shortly. But we'll go ahead and get it started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show at 11 a.m. Eastern time is go through the live mortgage rates for the different programs. And then we do a deep dive into a different loan topic each day. Today's deep dive topic is going to be very special, which is a CDFI no ratio owner occupied loan. So this is very specific, very amazing. It's mind blowing for those who may qualify for it. And it is an amazing tool for loan officers to be able to use to solve problems with borrowers for their primary residence. So our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, is going to do a deep dive into CDFI loans here shortly. But before we do that, go ahead and pull up our pricing tool to see what the rates are looking like this morning. So Nick, if you're ready, let's pull up the pricer and see what the market is looking like today.
All right, go ahead and change my screen. Check it out. So as Kyle mentioned, this is our pricing tool for our team. This will show us the general rates and the APR for today. It is November 21st, just after 11 a.m. So most of our standard programs are live. So we'll set up a basic scenario here and compare the APRs. If you would like a full breakdown, an itemized loan estimate with all of the fees that go into the APR, please get with one of our team members. We have over 400 licensed loan officers in 24 states. So for the demo, we'll set up a scenario to compare across the programs. We'll set all the demos to a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We're going to look for the absolute lowest rates possible for our conforming conventional programs first. Then we'll check out our FHA options, which is usually the next best option for most borrowers. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs, including one for the topic today. We also have VA and USDA. Remember, VA is only for eligible vets and active service members. If you are, just let us know. We can quote it, no problem. And same with USDA, that's only for eligible properties. If you do happen to be looking, just let us know. Since those are special, though, we don't do those live here. We'll start with conforming conventional. We'll do a purchase, 30-year fixed standard loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt-to-income ratio of 40. So let's check out the conventional options this morning. About the same as it was yesterday here. 6.75 rate, 2.5 discount points and cost. APR just a touch over 7.057. So good option, much lower than it was a couple weeks ago. We were approaching 8 on the APR. Now we're back into more reasonable action. So please, all of the borrowers out there that have been shopping, take advantage of the lower rates. Now, if our customer doesn't qualify for a conforming conventional program, the next option we want to compare using the same exact settings so we can compare apples to apples here is an FHA program. FHA does allow more leniency on credit issues as well as a much higher debt to income ratio overall. However, for the demo, we'll keep everything exactly the same so we can compare apples to apples here and compare the APR. It's still broken here. All right. Well, just like yesterday, for some reason my APR is off here, so that's not going to be a good comparison. But the FHA 6% rate is the best rate, 2.25 discount points and cost, probably puts the APR just under 7, but obviously this is wrong here. So our customers that need to use FHA, definitely some good action recently with the lower rates. Now, our topic for today and what we really love to specialize in is if our customer unfortunately doesn't qualify for either conventional or FHA using their 2 years of tax returns. Many other banks or lenders will have to deny that customer, but we have over 5,000 additional options, including the option for today under our expanded guidelines, also known as non-QM. So when we select this option, we now have our income selection that pops up. So full doc is what is used for conventional and FHA. So if our customer doesn't qualify using full doc of 2 years tax returns, we're typically going to choose an alternative here. So a lot of different options here. We do shows on basically all of these. We have asset-related programs, business bank statement programs, investor DSCR programs for investment properties. Personal bank statement 12-month is what we use for the demo here, but we also have RSU, stated income, VOE, 1099, P&L, and no income CDFI, which is Jose's topic for today. But for the demo, we always use the personal bank statement 12-month for our self-employed borrowers. So let's check out these bank statement options. All right. Looks like the best option here at the top, 7.5 rate, 2.375 discount points and cost. Put the final APR, 7.923. So the non-QM, definitely a little bit higher. We were beating conventional for a few days there. Now it's a little bit higher, a little more standard. However, our customers are still very happy to take these programs. They are very comparable to conventional now. So definitely, if you need a little bit of extra help, check out some of these options. There's also dozens of different options here, so please get with our team. Some of these at a little bit higher rates and costs may allow things like bankruptcies and foreclosures, and other issues also may allow us to use different ways to calculate the bank statement income. So tons of different options. Please get with our team to navigate the hundreds of versions there. And before we get into Jose's example, we always want to do live investment property pricing. So we'll set up the same exact scenario, and this time we'll search for the lowest rates for an investment property under conforming conventional, and then we'll compare that to our expanded guideline non-QM programs. Remember, FHA, VA, USDA do not work for investments, so we simply have these two categories here. We'll start with the conforming conventional. We'll keep everything the same as our other demo. All we've changed here is the occupancy, so we can see the adjustments conventional has added for investments. All right, best option here at the top, 7.374 rate, 3.5 discount points and costs, puts the final APR 7.806. So good option for our customers that need to use conventional, definitely a lot lower than it has been recently. Let's scroll down here and find our special program. It keeps going down on the list, so our portfolio program's still here. Remember, this program is technically a non-QM program, so this was beating conventional by quite a bit because it doesn't vary as much. Now that we've seen the conventional rates drop, we now have about 10 conventional options that beat that. So always keep your eyeball on that portfolio one, but conventional is back with the recent drops here. Definitely some good options. However, most customers would like to compare some non-QM options as well. So anytime we have an investor, we always want to send them options for conventional if they qualify, but also compare that to our non-QM investment property programs. So for the final demo here, we will set investment property, expanded guidelines, and now we can select our income, which the most popular income for an investment is going to be our DSCR loan. That's our most popular loan by far. That's because it doesn't require any income or employment info or documentation from our borrower. We simply use the estimated rents to determine a DSCR ratio. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, that's a ratio of 1.0 or higher, aka the property cash flows. Even if the property doesn't quite cash flow monthly and the ratio is under 1.0, we have options for that. For the demo, we always put 1.5, which is the highest value the computer accepts, so we can see all the options. And finally, prepayment penalty is standard on a non-QM investment property. So 3 years is what we use for our demo. We can select 0, that will cost more and limit what shows up. We could also select 5 years, which will cost less, but does limit the programs. So 3 years is most common. That's what we'll use here for the demo. All right. So good option here at the top, 7.625 rate, 3.25 discount points and costs. Puts the final APR just a touch above 8, 8.150. So remember, conventional was right there at, I think it was 7.8. Here we have a DSCR. We were beating conventional for a few weeks there. Right now we're about 0.3 higher, it looks like, maybe 0.4 higher between a DSCR and a conventional. Even at a much higher gap there, I'd say most investors would take this program. I'd say 99+% of investors, when comparing a DSCR to a conventional, when they're nearly identical in price, will choose the DSCR option. Tons of flexibility. You can do 1, 2, 5, 10 loans at a time, cash out multiple properties, purchase multiple properties, no employment, no income needed. So very easy loans. If we scroll down here, there's dozens of different options. Some of these at higher rates and costs. Again, may allow foreclosures, bankruptcies, may allow us to use different ways to calculate income, short-term rental income. So please get with our team to find the best option. Now let me switch my screen and we'll get into today's topic, which is a unique one, as Kyle said. For those of you that just joined us, I know we got a few more people that just joined. We're going to be talking about CDFI no ratio primary home loans. So when I do the live pricing demo, you always see the no income option. There's really only one loan product that offers this, and it is a very special product that is a very specific program that is basically designated by the Treasury. So first, Jose, you want to go into the definition part of it and explain a little bit more about what this program exactly is, and then we can get into some live demos. This program also is new. Obviously, it's only been around a couple years, and it is definitely a changing landscape, I would say, right, Jose? We always have different options. There's not a lot of options out there, so thankfully we do have an option still. But for all the loan officers out there, make sure you pay attention. This is a volatile product. But as the markets have stabilized, so has the product here. So, did Jose freeze? I don't think he's meditating that long. Yeah. So okay.
Yeah. Why don't you go ahead and explain what it is, and then Jose can pull up the rates when he gets back. When he comes back to life.
So the CDFI program. Let me just make sure I have it exactly perfect. So. Community Development Financial Institution Program. So it's a designation by the U.S. Treasury for banks or financial institutions that allow them to access a certain set aside of government funds, essentially, in order to foster certain goals. So there's a whole bunch of stuff that you'll find on the CDFIfund.gov, the government website. However, when a financial institution is designated with this designation and they have to pass through a bunch of hoops, the goal of this designation and the goal of the CDFI program when it comes to mortgage lending for us as lenders is to foster homeownership for basically the underserved, right? So that's something we're very passionate about. We love non-QM. We love serving the people that may not qualify for conventional home loans with our non-QM programs. And even within that, once we go through all the different options, there are some borrowers who still don't have even a non-QM bank statement, 1099, all the standard options we go through available. That's where the CDFI comes in and says, hey, there are still great borrowers out there. A lot of the times I use this program for our borrowers in the crypto industry, right? They make plenty of money. There's plenty of economic activity that's within the crypto industry. They may be consultants. They may be traders. They may have created some sort of crypto. However, the nature of crypto is it can't be tracked as easily. So a lot of those borrowers, while they may generate income and generate revenue, may not be able to prove it through traditional means, but they are still part of the American economy, right? They still deserve home ownership, opportunities for home ownership just because they chose a new industry or something along those lines. Also, Jose loves to recommend to use these programs for borrowers who may be between jobs, right? Someone like an executive that may be between jobs, they often don't have another specific job offer where they may have had a very strong, leadership position. They may take a break or not have an employment offer in place, and they need to relocate to find a new opportunity. But they may not be as apt to have pay stub in place before they move. Those types of executive type borrowers may need a little bit of massaging. So we've used these programs to execute for those sometimes where it's just someone makes a conscious decision to have some sort of gap in employment, which would then become problematic for a standard program. And then, of course, there's obviously minority borrowers who are very apt for this program because there is an additional incentive that we can offer to what they call CDFI eligible borrowers. I believe the designation is it's Hispanic and African American. I believe it is, Jose, as far as the CDFI eligible borrowers. So the program's open for everybody, but it's specifically for underserved, which obviously the government has designated African American community and Hispanic borrowers as underserved. So if your borrowers do fall in one of those categories, they do get an extra incentive with this program. The program's open for everybody, but the program is specifically for those borrowers that may have an extra need, so they get an extra incentive. So Jose, I broke down the program. I know you froze there for a minute. So we went through CDFI. Why don't you just talk a little bit more about what you're going through on the demos and just to explain a little bit more about what's been going on with this program as they've changed the guidelines, kind of a moving target here. So just explain a little bit of the volatility, which I didn't get to. You're still muted there, bud.
Good.
There you go.
Good morning, everybody. Sorry for the little technical glitch. I did notice that my internet speed was a little bit low this morning. CDFI is U.S. Treasury authorized program. So it basically does let us break the law, basically, Dodd-Frank Act, right? Lets us do not have to verify people's incomes for primary and second homes in order to qualify. So very, very good option for our borrowers here. So let me go ahead. Give me a second here to pull this one up. And I will be ready to share with you. Okay, let's go for it. So I have some purchase options and a refi option for you. Now, this is for primary and second homes only. Now, a very good use for this product, for example, we had a borrower living outside the U.S., actually living in Colombia, a U.S. citizen. And as sometimes is the case for U.S. citizens living abroad, had not claimed any income on his U.S. tax returns for years, right? Even though technically any foreign income is supposed to be claimed on the U.S. tax return, it doesn't always get done that way. So in this case, he wanted to buy a property in Illinois as a second home for his daughter to use while she went to school, and for him to go and stay there anytime he wanted to visit. So we were able to put together his deal with the CDFI loan. Second home, he had excellent credit, and he just had to give 20% down. So this is a credit score and reserve-based program, right? That is pretty important to note. There is a 24-month PITI reserve requirement for this program. Used to be a lot less, but as the guidelines tightened and outlets that offered this option were reduced, the few players that are left are basically asking for 24 months reserves, but that is still a great option when you consider this is a primary second home option that basically lets you circumvent the Dodd-Frank Act, which states that any primary second home loan has to have an income verification component, which this one does not have. We've also been able to use this program for example, you could have a borrower that's relocating from one state to another state. They have not yet accepted a job offer. They may have several in the works, but they don't want to rush into accepting a job offer simply so they can close on a full doc loan. So they would prefer to set this loan up and close on it and then move and then look for the job or finalize the job offer, as opposed to rushing to get a job and find it and accept it just so that you can close on a loan and move. So this does give you plenty of flexibility and no prepayment penalty as always on these primary and second homes. So at this case, at an 80% LTV with a 740 plus credit score, 2.5 is your 10.25% at a cost of 2.5 points is your lowest cost option. There are a couple of little bit lower rate options, but each 0.1% lower in rate will cost you a quarter point in fee. So this is our 740 plus option. And then 720 to 739, the only difference is the rate increases by 0.25, and there is the same 2.5 cost at 20% down. Now, once you get to a 700 to a 719, down payment increases to 25%, but cost drops a little bit and the rate drops a little bit as well. So you're at 10.375% rate at a cost of 2%. And there were two other rate options there. I think you could buy it down to like 10.125, as long as you don't mind paying 2.5 points. So this is 25% down, 700 to 719. Okay, now 680 to 699, you are looking at 30% down, and 680 is the minimum credit score, by the way. This program used to go lower in credit score, but like I mentioned, there has been some tightening of the guidelines. So here, 10.875% rate at a cost of 2% is the lowest cost option for your 680 to 699 purchase. And then for our CDFI refi, we do have, like I mentioned, 70% is the max LTV for a cash out refi. Rate and term refis are at the same LTV as purchases. So in this case, at 740 plus credit score, you're looking at 10.5% rate at a cost of 2 points. And keep in mind, I don't have any more cash out examples for you, refi examples, but again, the minimum down payment is going to be, minimum LTV is going to be 60% on these, and the minimum FICO score is going to be 680 on your CDFI cash out refi options. So again, it's a little bit of a pricey program, pretty hefty reserve requirements, but they are the only option that we are aware of in the industry that lets you circumvent the Dodd-Frank Act and have your qualified mortgage without any income verification, not even a job verification. So very special program here.
All right. I actually don't see any questions, but what an amazing program, right? No income verification, no employment verification. Obviously pretty hefty on the down payment and the reserves, but like you said, Jose, I mean, when you need to use this program, it's there, and you would need to use it. And for the people that do, the higher down payment and reserve requirements are kind of the least of their worries when you need to use a program like this, right?
Absolutely. I mean, let me give you a couple examples of some recent closings that we just had. We had a 1.35 million closing where it was an executive going through a transition, one of the business owners. So he was not really able to verify the income necessary because it was in some type of a stock option swap that they were giving him, so they weren't really like giving him extra earnings. So his wife, who had amazing credit, right, a little bit better than his, was the borrower on the loan, and they actually did not have to sell their current primary, which then transitioned to
Right.
being um, a whatever second home investment property. They were able to purchase the new one, which was only like 5 miles away, right? Didn't have to sell, so then they could calmly put the other property for sale if that's what they were going to do. And there was no issue in occupancy because it was a much bigger home that they were buying. And we were able to close on that program with 20% down. And we had another similar closing like that. That one was in Florida. We had another similar closing like that in Georgia, where business owner had a really odd way that he was getting paid. So the best option was CDFI, 20% down, and that one was like a million, almost 1,100,000, almost 1.1 million loan amount. So yes, good. I mean, for the right borrower, it's an amazing product. I mean, but we as MLOs have to be aware when we are um, pre-approving the borrower, just because they happen to have the 20% down, maybe they saved up their whole life and they have an 800 credit score, may not necessarily mean that's the right candidate for this loan if they really aren't going to have a way to pay it, right? So we can't just haphazardly put somebody into the program who fits the boxes of qualification but doesn't really meet the ability to repay that we as an MLO would have to delve in and make sure that they're going to be able to pay it, regardless of the fact that there is not income verification. Does not mean that we do not have to do our job as an MLO there.
So it's not going to be required to prove, but you're saying as a loan officer, we're not going to put people into a loan where we don't think they're going to be able to repay. So although we don't have to verify the income, you wouldn't put somebody in this that just basically says, well, I don't really have any income, but I have 20% down. Right?
Yeah, yeah. Like let's say a retiree, right? Saved their whole life. They got the money for the down payment and they got the money for the reserves, but their only source of income is $1,100 a month Social Security, and the payment for the property could be $3,000 a month. So unless that person says, "Hey, my family's going to live with me. We're all going to live together. And we're going to have good income. We're not going to have any issues paying for the property, so forth and so on." That's fine. But if there's nothing like that going on, then you gotta really, think really deeply and hard about putting this person into that loan who's not going to be able to pay for it. Because remember, if they default us on top of everything else that can happen, defaults are going to come back to haunt us.
You say hefty reserve requirements. Is it more than 12 months reserves?
Yes, sir. 24 months is the minimum reserve requirement for this program. Used to be 6 months for like super credit. Then they increased it to 12, and now they increased it to 24.
So they're not getting rid of it because it still needs to serve the underserved borrowers, but they're increasing the reserves required. Let's see here. So a stock option account does not qualify for the reserves. That's what.
Yes, a stock option account would qualify for reserves as long as they have a statement for it, right?
But it's liquid, right? It needs to
Yeah.
be actually a marketable security, right?
Correct. Yeah, it has to be something that's already has a value to it. in an account. Right now, the issue we had with the one borrower was that they were getting paid with stock options, and they hadn't really had any income for the past 2 years to speak of, because it was all being based on the fact that, okay, now your payday's coming and you're going to get, a few $1,000,000, but none of that was verified for the previous 2 years as income.
All right. And then another question, what other types of collateral can be used? And this is really for most loan types too, right? We're not really even talking about CDFI when it comes to just talking about what type of reserve we can use, right?
Well, now I'm not sure for what they're wanting to
They're talking
use.
about reserves. They're talking about
Right.
reserves, what you could use for reserves.
I mean, reserves is you just hit the nail on the head previously, is liquid assets, right? Uh, Same as if you were doing an asset utilization program, right? Checking, savings, mutual funds, stocks, bonds, 401k retirement accounts, any of those can be used. That's called stock options. That's just another type of stock, as long as it's already, in the account, and not just a contractual agreement that says this is what we're going to pay you, but already in the account. That's a different thing. But anything used as reserves has to be liquid. It should be able to be liquidated for a set amount, and then depending on the type of asset, there may be a haircut or an adjustment against the asset because of reduced liquidity. Like, for example, 401ks, usually retirement account, are usually going to have some type of an adjustment, because they know that there's going to be probably a fee, some kind of penalty when it gets withdrawn before the person reaches, I guess, retirement age. And some plans also have fees for hardship withdrawals or any other kind of withdrawal from the plan. So keep that in mind.
Basically, any kind of liquid asset that can be
Yeah.
liquidated right away.
Correct.
Right.
And if we're talking about down payment, same thing for down payment, same type of liquid assets. And in these types of loans, our standard loans we're not really cross collateralizing any other properties with these types of loans. That's something that may be possible in like the commercial world, but not in the residential lending.
All right. And last question here. Corey has a good question. Can gifts be used for these reserves in this program?
Absolutely. Yes, that's one of the good things about this program. Gifts can be used for the complete shebang. It can be used for the down payment, and it can be used for the closing costs, and it can be used for the reserves. It has to come from an acceptable donor, so we would have to check on what are the acceptable donors. Usually it's going to be family, but look into that, because they also allow employers to give gifts, and other governmental type agencies to give gifts for this program.
So you're saying the entire amount of money, 100% of it could be a gift, down payment, closing costs, and
Yes, sir.
reserves?
Everything.
Wow.
Yeah, I mean, as long as you show them the money. I mean, when it's a gift, remember the gift has to be transferred into the borrower's account, unless it's a gift of equity for the purchase. That's a different type of gift, but still a gift. But yeah, the gift would have to already be transferred into the borrower's account. It's their money. The money's verified, and you're good to go.
All right. What an amazing program here today to go over. So appreciate everybody tuning in. Remember, I can't even talk. It's so amazing. I can't even talk anymore. Remember, we do this at 11 a.m. Eastern every morning, where we go through the live mortgage rates and then do a deep dive into a different topic. So we'll be back tomorrow with a new topic. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. Great presentation here today. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.
Have a great day.